Someone better call the local matador because I'm seeing a lot of red.
If you happen to miss it, the stock market straight up did not have a good time today. Across the board, seeing a lot of red. And in this video, I want to be breaking down the likelihood of a continuation to the downside. We're going to be talking about the overall market. We're going to be talking about the government shutdown. We're going to be talking about what's going on with monetary policy. But most importantly, we're going to be diving into an earnings announcement that kind of has the stock market on its back right now. I'm talking about AMD and a little bit of SMCI. So if you're paying attention to those two, yes, you're going to care a lot about this video. But if you're paying attention to the overall market, if you're an active day trader, scalp trader, or even a swing trader, you're going to want to pay attention because here it looks like we might be in a little bit of danger. Very quickly, before we get to the exciting topic that is, will the stock market crash? If you enjoy these type of market breakdowns, don't forget to like, subscribe, share this video with your grandma. With that being said, let's roll the tape. When the stock market officially closed today, Tuesday, November the 4th, here was the headline. Stocks closed lower, hit by AI valuation concerns. Nasdaq drops 2% after Palantir earnings. Across the board, it was not a good day. By the time the dust settled, $730 billion of value was wiped out of the US stock market today alone. The S&P 500 dropped 1.2%, the Nasdaq dropped 2.1%, the Russell dropped 1.8%, and Bitcoin dove to $100,000. We're talking about a retreat from 126, currently down 6%, and doesn't really look to be getting caught anytime soon. So as that first headline alluded to, a lot of this all started with the Palantir earnings last night. Palantir tops estimates, boosts fourth quarter guidance, and AI adoption. Now I get it. If you're listening to me and you're saying, wait, that Palantir led to the sell-off, it beat on top and bottom and improved its guidance, why in the world are we selling off? Well, remember, right now we're in the AI craze, the FOMO situation of AI leading the market higher and higher and higher. And the only way that possibly gets sustained is not only do we beat, but we have to phenomenally skip by all earnings to keep the party going. We've all been in college before, and we know that the party doesn't go forever. And as long as that DJ's bumping it and the drinks are flowing, the party is fine. However, all of a sudden, if things slow down, and yeah, it's fine, but not absolutely phenomenal, well, all of a sudden, people lock in their profits, they run for the doors, and they wait for the next party. Palantir stock, ticker symbol PLTR, dropped 6% on valuation concerns, as in, are things overvaluated or is the bubble about to pop? As CEO Karp rips short seller market manipulation. Right now, there might be a little bit. I don't have the evidence of it, but obviously internal to the company, they probably have more than I do. Anyway, what I'm really seeing here, and I think this is the telling reason of what happened with Palantir, is if we look at the options market the day before, you can see right here, the yellow line way above the blue line. And we don't have to get into the nitty gritty, nerdy ass math of what this means, but it is vol crush. Basically, the expectations were way higher. And then all of a sudden, when it didn't necessarily deliver on a phenomenal beat, that vol drops and everyone who bought calls gets crushed. Even people who bought puts get crushed because you see vol crush. On the left side, you have the implied vol and it just got absolutely destroyed. So that in itself wasn't good. But of course, when it rains, it pours. Fed Governor Lisa Cook, in first policy speech since Trump's suit, says she's undecided on December rate cut. She is echoing what the Fed chair, Mr. Jerome Powell, said in the last meeting. And right now, there's a lot of question marks about what will happen in December. Going into the October meeting, there was about an 85% chance of another 25 bips rate cut in the December meeting. But now that Powell and Cook and a few other of the FOMC voting members have said, we don't know, the ads have dropped down to 60%. Obviously, not so good. Job openings in October slumped to the lowest level since February of 2021. As I said, I hope you have on your poncho because when it rains, it pours. Government shutdown set to become the longest ever after Senate vote fails. Right now, we are currently seeing this going into mid-November. That's where the betting markets are at, but who knows if that's going to change because it doesn't seem like our government can get their act together whatsoever, putting a lot of downward pressure on the risk on bets. In fact, Bitcoin got clocked. Bitcoin falls below 100,000 for the first time since late June. And in fact, it was all of crypto. $250 billion wiped away from the crypto market today alone. So between the equities market and the crypto market, we lost 1 trillion. I'm not saying million or billion, I'm saying trillion with a T. We lost $1 trillion worth of value today alone. Obviously, only God knows what the market's going to be at market open tomorrow morning to get to hump day, Wednesday the 5th. But for right now in post-market, the SPY not looking so good, the NASDAQ not looking so good, the Russell not looking so good, and Bitcoin definitely not looking so good. In fact, we just cracked 100,000 again. But for everyone paying attention in the live show, these update videos, and in the Goonie Trading Discord, we kind of don't mind because we were fully prepared for this. If you looked at the options market, the writing was on the wall. And in fact, I actually had one of my best days in a while, making almost $50,000. By the way, I'm executing this all via public, and that's just because it's the best place, in my humble opinion, to trade options. Big shout out to public.com for sponsoring this portion of the video. You've probably heard me say it before, and you're most likely going to hear me say it again, but if you're trading options and not using public.com, you're probably leaving money on the table. Public is one of the most cost-effective platforms out there. No commissions, no per contract fees, plus they pay you a rebate on every stock and ETF options trade. That's right, you earn between 6 and 18 cents per stock and ETF contract with higher rebates as you trade more. If you ask me, that's all great, but now the platform is even better. You could build a multi-asset portfolio with stocks, options, crypto, and bonds all in one place. You could take advantage of their tools, including a real-time options hub, a customizable chain, smart strategy builder, and even a queue so you can prep multiple trades and fire them off when they're ready. And for my systematic traders, Public's free trading API gives you full read-write access so you can automate your edge without paying a cent in commissions. If that sounds good to you, check them out at public.com/Matt Kohrs or hit the link in the description and you'll quickly learn why Public is my favorite. And of course, thanks again to Public for sponsoring the Goonie community. Once again, a special shout out to Public. They're absolutely awesome. You guys should really check them out. But since we're here talking about options, let me show you what happened to the options market today. Well, the delta got absolutely annihilated. And that wasn't just in the S&P 500. We saw a lot in the Mag 7. And yeah, even though both went down, it was the longer duration that really took a hit. So I wanted to dive into what was specifically happening here. Look at this. People could not get out of NVIDIA calls fast enough or Tesla calls fast enough. Those were the two major Mag 7 plays that people who had calls going into today were hitting the fire alarm. They were hitting the escape hatch as fast as they possibly could. Alrighty, let's do a quick review just to make sure we're all on the same page. This started a couple days ago when the market kept gapping up and up and up, and everyone said, wow, that's a lot of bullishness. I wonder how long it could continue. The answer was not that long. We had Palantir's earnings, which were good, but not good enough to keep the party going. And then there were some really party poopers named Lisa Cook, who basically came in and said, hey, I agree. We might not get another 25 bips rate cut this year, which made the market say, what in the world is going on? And then when you pepper in a little bit of the fact that the US government is still shut down and no one knows what in the world is going on there, well, that adds a lot of uncertainty to the system. And when people were way too levered into calls, like that boat was as filled up as it possibly could be, people start to unwind. That drops the delta. And when the delta drops, the market makers unwind their hedges by selling the underlying, and thus you get a sell-off in the market. So we didn't necessarily have bad news, but we didn't have good enough news to keep the party going. And when everyone is way too over-levered in the derivatives market, which has a time component, they decide to unload their positions, and then that has real market consequences as the market makers have to re-hedge the newest bets in the market, and then that's when you see the drop. So if anything, it's the fact that we had all right news, and really it's because way too many people are extremely over-levered in the options market. So that's pretty much the skinny on what happened, but if you're watching this, there's a very good question. You want to know what in the world should we look towards next? Well, let me kick this off by once again returning to the options market and show you where the positioning is at. Right here, you can basically see we have about a bimodal distribution. I know that's getting a little fancy on the S&P 500, but we have a low vol point all the way down at 6725, and we have another point around 6950, and looking where SPX closed at 6771, well, we're basically in the middle of that. we're either going to push about 50 points lower, or we're going to get a nice rally back to the upside closer to 7,000. There are clear bets down here. There are clear bets here. And the question is, who's going to win? Obviously, from a distance perspective, this one, the left side, the south side, the bear side is a little bit closer. But if you ask me, which way we really go is going to be dependent on the earnings that came out as I'm filming this video. At market close today, AMD, Supermicro, they're related to the world of semiconductors, i.e. processing chips, i.e. this AI craze. And right now, let's see what those numbers actually are. AMD ended up beating earnings, beat on EPS, beat on revenue, and it's slightly green. But when I say slightly green, that's actually extremely problematic. And I know that's insane for me to say, and I said that it was insane for me with the Palantir earnings yesterday, but look at who ended up being right with that one. Unfortunately, the options market was looking at a 7.1% movement, as in we didn't really move as far as we needed to move. And let me just double check where AMD is right now. We're here. I'm going to check it real time. Oh no, it actually dropped now. Okay, no, that's actually really problematic. Oh, brother, look out below. And it's definitely not going to be made any better by the fact that Supermicro, a smaller company, but still in the sphere, dropped 9% in post-market trading. Let's see how that one is doing. Oh, and that's down 8.7%. Well, we needed these two to give us any shot of recovery to the upside, so it seems like the downside case at this point in time is a lot more likely. So really, what is the downside case? Pretty evident. Downside gap fill on SPX to 6749. It is the high from Thursday, October the 23rd. Pretty evident play. Yes, there's still an upside gap fill. Technically, we didn't hit it today, even though we got very, very close. I would say right now, especially because AMD missed, that is 100% what I'm looking for. If you happen to be playing the NASDAQ, well, there's a downside gap fill to 25,126. And yes, just so you know, there is also an upside gap fill. It's this green line here. But based on the fact that we just missed earnings, well, I'm going to be looking at that. Based on the fact that everyone's unloading calls and too many people were betting on that, it looks like the downside gap fill at this moment in time is statistically more likely to occur first rather than the upside gap fill. Obviously, I am not clairvoyant. I can't tell you the future, but I am letting you know I don't just talk the talk, I walk the walk, as everyone in the live show, these update videos, and the Discord knows. And right here, here's my positions. I bet on the downside, currently up $53,000 today alone. And depending on how things play out overnight, this might be gapping up to even more. So I hope to see you in the live show to check out all of the chaos. All in all, things are fine, but because of the options market, that means that they're actually bad because too many people were betting on a large movement to the upside, which is just not occurring. And as those people unload their bad bets, it's going to put downward pressure on the system. So what am I looking for? I'm looking for the downside gap fill. So I think there's going to be a full-on stock market crash? No, but I think some good money is going to be made to the downside. That's what I have for you today. I hope you're absolutely crushing it. Of course, if you have any questions, comments, or concerns, let me know in a comment below, and I'll do my best to get back to all of you. I appreciate all the good vibes. I'll catch you in the next one.
Peace.